There's a lot of talk right now about a massive wave of mortgage renewals coming, and that it's going to crush homeowners. But I want to add a little bit of context because in reality, it may not be nearly as bad as people think. Over the last few weeks, I've been digging into this pretty closely, and I'll start with a real example. I had a client who just renewed both his primary residence and a rental property. He renewed his primary at about 3.4% and his rental at about 3.9%. So yes, more expensive than before, but not catastrophic. It wasn't life-altering in any way. So let's put some real numbers to this. If you bought a single-family home about 5 years ago, the average price was roughly $810,000. So with about 10% down, you'd probably owe around $700,000 today. Even if you had the best rate before, renewing now likely means about a $500 per month increase. Condos are similar. Average condo prices were around $380,000 back then. So with 10% down, that's roughly $340,000 remaining, which works out to about a $250 per month increase. And here's the part that often gets overlooked. Anyone who got a mortgage in the last several years had to qualify under the stress test, which means they already proved they could afford payments at a rate higher than what they're likely renewing into today. I also spoke with a mortgage broker recently, and this surprised a lot of people. Some banks are actually willing to drop rates by a quarter point or more just to keep clients from shopping around and to help maintain affordability. So yes, renewals are coming, but no, this doesn't look like a scenario where the sky is falling down. If you're coming up for renewal and want a solid mortgage broker referral, I'm happy to connect you with someone I trust. And if you're curious what your home might be worth in today's market, especially before refinancing, reach out and we can set up a time to review recent comparables and talk through your options. No pressure, just good information.